What do you see in 23? Just before 2008, it was a real estate bubble supreme. It was a subprime thing. Everybody was flipping houses and doing all this. In 2008, we knew a crash was coming, and it turned out to be one giant crash. And Kenny would always do this. He says, man, I was going to make a lot of money. I suspect this crash is going to be different than 2008. So I bring Kenny. Kenny and I made fortunes because after the subprime market crash again in 2008, the Fed dropped interest rates like this. Our debt went like this. And now in 2023, we're screwed. The whole ecosystem has changed. So I have a question in that saying it's different this time. Do you concur or not concur that this crash is going to be different than 2008?
Well, there's a couple things. One, people are in a lot worse situation, I believe. There's over 300,000 people already underwater on their mortgages that bought in 2022 already. So, it's starting, Robert, as you said.
What Kenny has always said, the key to real estate is jobs. And this time, interest rates came down after 2008. Interest rates are going up this time in 2023. And we're going to have massive unemployment. You look at Meta or Facebook, one of those, they're laying off thousands and thousands of workers. So it's not only interest rates going this way, it's unemployment going this way too. If you don't have jobs, that crushes real estate.
Yeah, I always tell people, real estate exists for people. You have to have people for it to work. It doesn't really matter what it is, an office building, retail, shopping center, apartments, houses. If there's no people and they can't afford it, then, real estate's going to suffer. And that's where we're heading next.
Right. So when they dropped interest rates after 2008, people were flush with cash because they could afford to flip and do all those goofy things. Then they could afford to go shopping. And there's one big difference about Kenny and the average investor out there. I mean, you got your start in property management, didn't you?
I was really fortunate where I started in the business by understanding the financial part of the business. Like if you don't have enough rent to pay your expenses, you lose the property, or if your expenses are too high or your cost of debt, which is kind of the big issue right now. I learned through managing hundreds and hundreds of properties. And so when I finally got the courage to buy them, I understood it operationally.
So I want to explain to everybody one of the reasons Kenny is so successful. He's a professional in the business, but he started in property management. And property management is where the money is made or lost right in there. Plus his partner comes from the finance side. That's the secret to his success. And again, I just want to reiterate this. In 2008, when everybody was out there buying houses they couldn't afford, they had ninja loans, no income, no job, Kenny was doing this. He says, the idiots are in the market and they're going to lose their houses soon. It was going to bring the whole market down in 2008. And when it came down, Bernanke got a Nobel Prize. One of the biggest criminal Fed chairmen gets a Nobel Prize for that. So now the whole economy is into this massive, massive bubble. And this new Fed chairman, Powell, is raising interest rates. So this is not 2008. This is 2023.
Well, we've already seen significant drops in residential, commercial already in the last 6 months. So every single week, I'm looking at 4 to 8 deals every week, all over Texas, Arizona. So I am in touch with the markets. I know what brokers are doing. I know what sellers are doing. And then we also have 68 million in renovations going on in our 10,000 apartments. So I understand the supply issues and the labor issues and all that kind of stuff. And because what I'm trying to do, Robert, is I'm trying to get the sellers to adjust their expectations. There's a big difference between the bid and the ask right now, between what I'm willing to pay and what the seller is willing to do. But I have all the leverage. I hold all the cards. The main thing is the cash flow. We always talk about this. The principles in cash flow are exactly what people should be studying. By the way, I bought real estate in 2005 and the value went down. But what saved me was the cash flow during those rough years. So if they can figure out a way to cover their expenses and their mortgage payment, hold on, because obviously you have to write a check to get out of something like that. That's the number one thing. And I think what people don't realize, at the end of the day, the tenants, they pay your house off. So they're gold. And so you have to treat them well. You have to take care of them and then just ride it out. Because I've been through this, and what saved my butt was my tenants and managing a property well and keeping the occupancies high. You have to be scrappy and figure out how to cover your expenses. And if you can't, you're going to lose the property and you're going to lose your equity. And that's what I see see next is basically the same thing you do when you're in a seat on a plane that's crashing. There's not a lot you can do unless you're cash flowing. I mean, that's it. The bank's going to want their mortgage. Just like if you stop paying your car loan, they're going to come foreclose it. That's just the bottom line. So you have to figure out a way to side hustle or whatever, because not only would you have to pay that back, you actually get a tax bill. If they have a write down, you actually get a tax bill for that too. So it's not as simple as just walking away. You got to fight like heck to figure out how to cover that, how to get that thing and ride it through. This happened to me in 05, 6, and 7. And we just tried to figure out how do we just cover our expenses and our debt. There wasn't a tremendous amount of cash flow, but we were just super concerned about keeping the properties that we have. And this is the entire point of reserves in cash. I know a lot of investors distribute all their money and go buy crap, and they don't have any kind of reserves, and any kind of an uptick like interest rates can wipe out some of their cash flow very quickly, which is exactly what's happening. This debt is killing a lot of people. Anybody who had bridge loans, variables, adjustable rates, all that stuff, their mortgage payments are killing their cash flow.
So back in 2008, the bad news was real estate market was crashing. The good news was the Fed was dropping interest rates. So it was like hog's heaven. I mean, we creamed it. So this time is 2023. Real estate is crashing from a bubble. Again, 2008 was a bubble. But instead of dropping interest rates, the Fed keeps raising interest rates. So if you haven't fixed your interest rate, you're in serious trouble, right?
Without a doubt. You think about this. The inflation rate was 9.1 in June. Now it's 7.1. So they've raised rates 6 times and it's gone down 2%. Now there is a lag effect, of course, but it hasn't really moved much. 2%, they've jacked rates. And so what's happened is all the real estate is being repriced right now, and it will be repriced next year. And there's no way that the Fed's going to be under, let's say, 4 on inflation by the end of next year. In my opinion, there's no way.
I hate to be pessimistic, but this is one of the worst things I've ever seen. The perfect storm is coming, and I think it's 2023.